OPEC has consistently advocated a balanced approach where nothing and no one should be dismissed. We need to embrace all energies, and I'm also going to ask Saudi Arabia and OPEC to bring down the cost of oil. You've got to bring it down, which frankly, I'm surprised they didn't do before the election. The winds blowing in the energy markets in recent days have raised a critical question. Are the global oil balances shifting forever? OPEC just made a bold move that's throwing America's energy strategy off balance. For a while, it looked like the US had things under control, but OPEC's recent production decisions have triggered a storm in the global oil market, leading many to wonder if the long-standing oil dominance of the United States is under threat. Some are calling it the most crucial move in history, while others believe it's just another natural supply-demand adjustment. Is the United States oil industry truly collapsing, or are these fears exaggerated? Rising or falling oil prices can shake entire economies and fuel a worldwide debate on whether we are witnessing a historic shift in the energy balance. Just when some experts predicted that the American shale oil revolution would enable the United States to become the world's largest energy exporter, OPEC's new strategy appears to challenge that assumption. In recent weeks, power players like Saudi Arabia and Russia have signaled their readiness to dictate oil supply on their own terms. Are we on the verge of the collapse of the United States oil industry, as some claim, or is this just another cyclical fluctuation in a notoriously volatile market? Meanwhile, electric vehicles, renewable energy, and climate policies loom in the background, forcing fossil fuel giants to adapt or risk losing relevance. The Biden administration faces the difficult task of balancing national energy independence with a global push for cleaner alternatives. OPEC's move has added urgency to discussions on energy security, oil revenues, and the geopolitical tug-of-war over market dominance. Welcome to our channel. If you're curious about the facts behind these bold claims, don't forget to subscribe, turn on notifications, and like our video. Now, let's dive into whether these production cuts and global energy shifts signal the end of the United States oil power or the beginning of a new chapter in a long saga. OPEC has recently adopted a strategy to drive global oil prices up by cutting production quotas. However, on March 3, 2025, OPEC Plus decided to increase daily oil production by 138,000 barrels in April. This decision is significant as it marks the first production increase since 2022. Giant players like Saudi Arabia advocate for reduced production to drive prices higher and protect their income. Since early 2025, the price of Brent crude oil has fallen by $1.83 per barrel, a 2.45% decrease. Meanwhile, the United States has reinforced its goal of energy independence by maximizing shale oil production. In December 2024, U.S. crude oil production hit a record high of 13.49 million barrels per day. Could OPEC corner the United States in this competition through drastic moves? By 2025, global electric vehicle sales are expected to rise by 18% to exceed 20 million units. This could impact the oil industry by reducing fossil fuel demand. Some experts argue that successive production cuts by OPEC Plus members, including Saudi Arabia and Russia, have placed U.S. oil producers in a challenging position. While high prices initially benefit U.S. shale oil, market volatility and geopolitical tensions could push major buyers to seek alternative supplies. U.S. oil has record refining needs, but what happens if demand declines or international trade routes shrink? OPEC's production cuts and the rise of electric vehicles are reshaping global oil markets. The U.S. oil industry faces these changes but has the potential to adapt through technological innovation and energy policies. The fossil fuel share in energy markets may decline as renewable energy sources and electric vehicles become more widespread, but the speed and impact of this transformation remain uncertain. The U.S. oil industry is under immense transformation pressure due to environmental policies and the renewable energy trend. The Biden administration stresses the importance of reducing carbon emissions, while OPEC believes it can control production as it pleases. The real question is whether fossil fuels will remain dominant for decades or if new energy solutions will take over sooner than expected. According to some analyses, OPEC aims to counter the United States' ambition to dominate the global oil market. The shale oil boom allowed the U.S. to become an exporter, disrupting OPEC's price-setting monopoly. Now, OPEC Plus has reinforced its position with the strategy of cutting production to control prices. However, if prices rise too high, the global economy could enter a recession, reducing demand and ultimately harming oil revenues. OPEC must carefully balance these factors. Looking back at the US market, some argue that the oil industry is in trouble due to soaring research, development, and investment costs. Profit margins have fallen, and financing has become difficult due to ESG, environmental, social, and governance, investment criteria. Some major banks have reduced lending to fossil fuel projects, putting pressure on American oil companies. Simultaneously, Biden's climate policies push for greener alternatives. Some claim that US shale oil is becoming unprofitable, while others argue that cost-cutting innovations can keep the industry alive. On the geopolitical front, OPEC's tough stance may be calculated to raise oil prices, increasing inflation in the US and raising the risk of recession. If the US economy weakens, Washington's global leadership may suffer. Saudi-US relations have been tense, with Crown Prince Salman emphasizing Saudi Arabia's independence from American influence. Russia, already locked in conflict with the West over Ukraine, appears aligned with OPEC Plus in challenging US dominance. Some believe OPEC's move is not just about economics but a political statement challenging American global influence. But is the idea of the oil industry collapsing forever realistic? Those expecting a sharp decline in oil demand point to the rapid spread of renewable energy and electric vehicles. However, oil remains crucial for transportation, petrochemicals, and industrial production, meaning a total phase-out is not happening overnight. Even as the energy transition gains speed, oil continues to be a key global resource. OPEC's strategy may seek to maximize short-term profits before renewable energy dominates the market. The US shale oil boom was a game-changer, but rising costs and regulations have made the industry less competitive. Some argue that American oil companies can adapt through technological advances, but time will tell who is right. Is OPEC really targeting the heart of the US economy, or is it merely trying to drive oil prices up for profit? Do you agree with those who claim the US oil industry is on the brink of collapse, or is this all an overreaction? Share your thoughts in the comments. If you subscribe and turn on notifications, you'll stay updated on major energy developments. Like this video to support us and help spread awareness. In future editions, we will explore whether green energy can truly replace oil and analyze OPEC's long-term strategy. For now, goodbye, and remember, in the energy world, everything can change in a day. A single move in this game can shake global markets. See you soon, and thanks for tuning in.